Pat, how vulnerable is this country right now, economically, socially, diplomatically? How tough is it out there for the United States to get itself back on its feet?
We're in a tough spot. We're importing half the manufactured goods that we need. About 20% of the core items that we need for our defense, we do not produce in this country anymore. We're not even producing enough bullets for our troops in Iran and Afghanistan. We're having to contract Iraq and Afghanistan. We're basically in a situation where we're no longer a self-sufficient economy. We've gone deeply in debt. We're financing that debt with China, Japan, South Korea, Taiwan, basically through their central banks. And they turn around and make political demands on us or say, we will not loan you the money. One of the reasons I wrote this book is to explain how we got into this and then show how we can get out of it. If we'll balance our budget, if we'll balance our trade accounts, and if we'll begin the process to rebuilding America, we can be out of this in 10 years.
And one of the things you talk about in your book is the idea of a value-added tax. How does that work exactly? Just a brief overview of what the value-added tax is and why it's so popular everywhere except the United States.
151 other countries use a value-added tax. A value-added tax is a tax on consumption. It is collected by the producers of goods. It is not imposed or collected from the individuals. Under the trade treaties that exist in the world, value-added taxes are rebatable tax, and what that means, for example, if in Germany an automaker produces a $50,000 Mercedes-Benz and ships it to the United States, Mercedes-Benz automatically gets a 19% rebate on that $50,000. In other words, they get a subsidy, a tax. Theirs is a tax-free export. The car comes into the United States at $40,000. If you take a Cadillac Escalade, $50,000, and send it to Germany under the global trade rules on VAT, the German government adds 19%. And so suddenly you're putting another 10,000 on. So an Escalade is selling in Germany for 60,000. So you add it all up, what you find is that there is a real incentive to move factories out of the United States, to move it to a country such as Ireland, for example, or China. And because if you're in those 151 countries, then these rebates and these add-ons don't exist. This is costing the United States at this point something in the neighborhood of about $357 billion a year trade advantage by the VAT. So what I suggest is we move to a VAT, we get rid of the corporate tax, we get rid of the personal income tax. There'll be no tax day for anyone. There's no tax forms. It'll all be collected when you buy something. And if you save money, it's all yours. There's no taxes on that. It will greatly simplify taxes in the United States. It would eliminate loopholes that corporations and others have. A 22% VAT rate in the United States would mean that 90+% of the American public would pay 4% less in taxes than what they do right now. It's a good deal.